Writing an angel check is easy. Knowing why is the flex. Angel investing. Underused, misunderstood, explained badly. Angels Decoded, an educated and raw take. In cahoots with Play Money. All right, so on Monday, a VC who is out actively raising a fund told me there are no new people who want to invest in startups. Like, think about that. $9 trillion of new capital from high net worth individuals entering alternative investments in the next 5 years. And not one of them want to invest in startups? Ooh, tell me how that fundraising goes, buddy.
It feels like a pretty big sweeping statement as far as reflecting and speaking on behalf of a whole population of people. But we're going to look at that in episode 10 of Angels Decoded. I'm Andy Walsh, you're Cheryl Kellond, if you didn't know. And today we're exploring what are some of the patterns that we see when we're looking at traditional investors and how does that impact everything that's happening in the world of angel?
I love it. It's so funny though. You're like, that seems like a big sweeping statement about a whole class of people. And when did that stop the Silicon Valley folks before? Like, never.
I look at patterns of behavior, right? And when people are investing in Series A and seed started getting popular, and then people were like, hang on, I actually want to go earlier. So all of a sudden you had pre-seed VC funds. And when folks were like, that will never happen. And look at it now. The people that are defining what's right and what's wrong, what is it about their state of mind and their rationale for why they're doing that?
So great question. Let's look at the situation I had the other day, right? So I'm sitting pitching to this VC and I'm pitching Play Money. And I lay in front of him this amazing data, especially for a company my stage, of how we show we can actually mint net new investors and the psychographics and identity formation process we go through to them. And he is looking at the data and he's like, nah, I've watched AngelList and Sidecar. They've been at about the same amount of angels for a lot of years. It's a niche market, not going to grow. I'm like, you can't look any farther than the tip of your nose and you're like, net market doesn't exist. I don't care what data you showed me. I think it's pandemic, endemic. I don't know what the word is of a whole group of people in the space who have been the traditional capital allocators. And they're working off of their own little echo chamber and their own little monoculture. Can you imagine being a fund manager raising a fund and you're like, yep, everyone that's going to be in this asset class, they're already here and this is a great place to be. It doesn't even make any sense.
I'm going to call it an endemic of echo
endemic,
chamber.
okay, I couldn't find that word, right? Pandemic?
Yeah, it's an endemic of echo chamberness. I'm going to make up words for this. But
I like it.
If you step back though, if that person was to speak to one of the founders of their portfolio that they had invested in, and that founder said to them, no, we've got everyone, every customer that we could ever get is in our business. We can't grow anymore. What do you think the VC would say to that founder?
Kick them out the door and try to take their money back. That would be a crazy response. And that is a perfect analogy because that's exactly what this guy was doing. It's ridiculous.
And the other data point, and I know you love this one, it's less than 5% of accredited investors in the USA invest in startups, which means 95% plus of people aren't. And the reason that they're not, we don't know why, but the opportunity is there. They just don't know about it yet. That's when awareness and creating a new market. So from a statistical point of view, what capital level are we talking about if we saw just a small shift in that percentage?
Oh, come on. You know my really favorite stat. Just 10% of us invested just $10,000 a year. We could match the whole angel through Series A private market in the US. We wouldn't just run alongside them. We would devour them. So it's enormous. And just the fact that you can't see it would ever change because you're looking at what someone did before that tapped out. Well, sure, you've got all the tech bro operators that want to write $25,000 checks to each other. Awesome. Market saturated. I guess you're right. I'm seeing a whole bunch of other market out there. To me, though, it was in the face of data in front of them. They could still not think it's big enough. They could still not like me. But in the face of data in front of them, they wouldn't budge on the position. There's no new market here. And they dug into that. It wasn't just like they started there. They were going all in on the bet. So there's a lot.
I would build on that too, that what we're seeing happen right now with a huge shift of wealth transfer right through generations as it gets passed down.
Right?
So you need to think about the behaviors of each of those generations. If you were to go through Gen X, Gen Y, Gen Z, even into alphas, and once people are aware of how they can make money in today's world, what we're talking about is a new wave of companies, but also a new wave of investors. And that's the opportunity for the industry at large, is to find those people and allow them to understand the value of angel investing.
Yes. I mean, it's not just the transfer of money, it's who it's transferring to. And who it's transferring to has lived in a different set of lived experience than the people holding on to it now and investing in it now. So the opportunity that creates, it's like this giant, it's like we're swimming in their blind spots. We have endless pool, old money's blind spots, which is amazing being an angel investor, a little less amazing being a platform for angel investors pitching that old money. That's where it falls apart.
I don't know if that's an oxymoron or if it's a contrast of those two things are, right? As far as
Maybe
what,
just a bad strategy on my part is what I was thinking in that call. It's like, why am I even here?
and for you to be able to grow as a platform, like getting investment allows you to scale and do what you're doing. And that's just simple in the sense of
It's
growing as
simple.
a startup. You need capital, and there's more capital out there that is not being spent in startups. So as an industry, we have a responsibility to also make people aware. And if you're thinking about the generational shift, if you're going to university today, you could choose to do subjects around entrepreneurship and creating a startup and actually study it from top to bottom and come out the other side. When I went to university, that didn't exist.
Well, it's not even that you're studying it anymore, because this is the world we live inside of, right? Like Play Money works with the University of Alabama, and they have a huge entrepreneurship push on campus because that's where the jobs of the future are. There's no entry level jobs for those kids. You have to be some kind of entrepreneur. And some people are going to do solopreneur businesses, some people are going to do scalable businesses. It doesn't matter what it is. That university, like, so ahead of so many others, because they're like, hey, our job as a university is to prepare kids for jobs. What are those jobs? And so they've got this entrepreneurship push. Their partnership with us is there needs to be seed capital for that entrepreneurship. What's the best thing you could do as alumni with money? You could donate it all to the football program, which we do not want to take a dollar away from the football program in Alabama. And you could invest it in campus spinouts and startups. Like, it's just a different way of thinking. But if you've got, core universities are like, this is where the future of jobs are, let's mobilize that capital to make that happen. It's a really fundamentally different shift. Yeah. It's not just like a new money coming in. It's the old economy is changing, and there's going to be more opportunities for private market investments that will generate wealth in lots of different ways that, again, crash right into that monoculture.
If you look at some of the major universities have a chief investment officer, they're using money they're getting from alumni to reinvest into a range of asset classes and looking to double down and make money off the money that they have, right? Because they're sitting on so much capital. And
You have to, right? I mean, private markets, the best new companies are coming out so high that, public markets look a little bit like a casino lately, perhaps. I mean, it's fine looking at the chief. I'm going to say this, though, like you just said, chief investment officer. As chief investment officer, your job is to 100% make more money from your money. That changes when you're an individual, right? So it's a different, that the CIO analogy isn't a great one, because it's different when you're an individual. And this is the second point of contention. And trust me, there were three, so there are plenty that I ran into with this VC in this very short meeting. And the second one, he was like, what did he call it? Like, just, he had some term for it, the optimal path or the optimal outcome. In his mind, because he was an investor, it was the only thing you want your money to do is to make you more money. That was it. And I was like, maybe that's why your friends at AngelList and Sidecar are a little tapped out in terms of their market, because there is more than that happening. It's a yes and. And again, couldn't see the yes and equation. I was like, you've never talked to any of my customers, have you, buddy? Tell I'm fired up because I've been out on the fundraising trail. And there's a reason fundraising is not my favorite job.
And it's important to talk about it because you have a platform and you're at the front line of understanding transactions that happen between founders and angel investors. You're seeing it, you're hearing it, and you're living and breathing that. And to then go out yourself and fundraise, you get a different perspective because you're talking to a breadth of people in professional and also private capital. And both of those stories are looking very different today.
Well, I think, I think it's even a bigger rift because we are not just, minting net new investors. We are at the front line of how early stage companies and private market investments is going to happen. Things are getting smaller. Founders need less money and can produce bigger results. There's new models for new kinds of businesses. Everything doesn't need to be a $10 trillion exit that's consumed hundreds of billions of capital and has the whole global economy precariously balanced on it. Like, that's not the only scenario that produces returns. And to grab that world of different kinds of returns, the capital naturally needs to fragment and be smaller and be right sized for whatever business they're investing in. So we're at the front end of making that happen at a great time when the best founders don't want to take as much money. So we're perfectly matched for that. And then I have to turn around back here and look for investment from the people that have, tied their horse, tied their wagon to the way things used to work 5 years ago. So I think the rift is even bigger.
Interesting. And if you look at, say, a financial planner, and depending on your age, they may recommend you invest your money in either high risk or low risk or everything in between. Angel investing as an asset class, if you had every financial advisor aware of platforms like Play Money and they were looking at it as a category that you could get a turnaround in 10 to 15 years. And like a lot of these bets are 20 to 30 years, right? People are playing long games from a retirement perspective and IRA equivalent.
Mhm.
So it's
Yep.
to be able to look at this and just educate the market, which is what we're trying to do here. Is one of
Mhm.
our missions is to let people understand what angel investing is. And for someone in the industry to say that, for me, I know it puts fire in your belly, but what it also does for me, it screams opportunity, because if that's the narrative that's happening at a formalized level from a VC side, then think about like the narrative that you can tell to combat that to people that aren't even aware of this opportunity.
Totally. You can absolutely do that. I would say like the wealth advisors are an interesting class of folks to do that because they're incentivized a bunch of different ways, right? Like, your wealth advisor at Schwab is never going to tell you to invest in startups because there's no AUM for them to make. There's just not. But more and more people in this new wave of folks getting this great wealth transfer don't rely on old school financial advisors the same way they used to. Or they say, great, you go manage this part of my money. I'm going to carve out this for myself because it's mine. And so that world and that pool still exists. And so I guess, one of the takeaways I had from this conversation the other day, and I mean, I always believe this, right? The monoculture of VC shuts out a lot of net new ideas. But it was such a great reminder that a new set of risk and return models apply to this new capital because their eyes are new, because their lived experiences are different. And so if I were making a bet right now, I'm going to trust my lived experience and my eyes on betting in startups versus doing what the money and the asset classes all that's been there for a while is doing, which is, on the most part right now, they are like heat seeking the fastest growing AI story they could find and like running towards that fire, no matter what the valuation, no matter what the metrics say it is, no matter what the costs are. And baby, you sweet summer child, I've seen this story play out a few times before. There are going to be a lot more people that get burned than roast marshmallows on that fire. Like, it's just too frothy and it's just such a quick about face and chase. And all of this opportunity to solve problems we've cared about for a long time still exists. And it's going undercapitalized and underfunded. And it's a huge arbitrage opportunity. So, like, our eyes see new problems, and the world has set us up to just arbitrage the crap out of it.
I'm seeing a lot of people dig their heels in because they're scared of change and what the future looks like, and they're trying to maintain relevance in an industry that is rapidly changing. And if you look at some of the startups that are coming through, like auto crypto trading, you have a bot doing trades on your behalf. You have markers for low and high, and it's buying and selling and doing it for you. So many examples of the same thing where if you had an accountant that was so skillful that would charge an arm and a leg that most people couldn't afford, what's happening now is people are getting access to what they do and how they do it and how wealthy people make more money. And some of that information is being flipped into a business model that then becomes a startup that then gives everyone the same access to the same information. So that democratization
Right.
makes a huge difference, right? Because everyone has access to the platforms all of a sudden.
Right. I mean, like, the answer I got this week was the equivalent of, 10 years ago, someone saying, patting Robin Hood on the head and saying, you know what? Charles Schwab sort of has the space locked up. E-Trade made things a little bit crazy, but we've been good for 20 years. There's no net new investors to create. And then, literally out of thin air, Robinhood created net new investors because they changed the underlying product on how it worked and the underlying vibe and structure of it. And all of a sudden, kazoom! And they're worth billions. And they've changed markets in a fundamental way. It's the exact same transition. It's going to happen over and over again. But when you're in the middle of it, you can't see it. But the rest of us can.
Cheryl Kellond, this has been another fantastic look inside of what you're seeing and hearing every day, and I appreciate the front seat. We've got to wrap up today, so we're closing episode 10. Love to be in double digits.
Love it. And just remember, your unique point of view is what's going to make you, what already makes you a better investor. Write the damn check. Write the damn check. Bye now.
Angels Decoded, a weekly podcast for people learning the craft. Angel investing made easy. Subscribe, then decide. Angels Decoded, in cahoots with Play Money.